Today, I want to share with you a hack that you can use to get into real estate investing, earning passive monthly income with little to no money out of your pocket and little to no risk to you because you don't actually own anything. So let's dive in. Hey guys, I'm Andrew Lewis, real estate investor and entrepreneur with over 10 years experience growing and building a real estate team and investing in real estate. Before we dive into today's video, make sure that you hit that like button, leave us a comment below with any questions or comments you may have, and be sure to hit that subscribe button so you don't miss out on future videos. I am here to help you break out of the 9-to-5, gain financial freedom, and grow wealth through real estate. Let's dive in. Today's hack is called apartment arbitrage. There are people out there that have built income streams of $10,000, $20,000, $30,000 a month through apartment arbitrage. And the gist of this hack is that you go in and you speak with an apartment complex and you sign a lease with several units. And you agree to pay that full year lease or 2-year lease, whatever you negotiate from there. And then you sublease those units out. And you usually do this with a fully furnished unit. So you go in and put in furniture, and then you lease these units out to traveling nurses, corporate relocations, people that need something temporarily while they wait for a house to be built, something like that, and you add some money on top of what you're paying for it. So this hack is amazing because you don't own any real estate. You don't have to worry about the fluctuation in the market going up or down. You simply just need to find new tenants to put into those properties so that you can make a monthly income and start earning money on a monthly basis. Side note with this, you do need to make sure that you're upfront and honest with the apartment owner or management company about your intentions here. It is illegal for you to sublease without letting them know. So be sure that you've communicated that, and if you communicate it well, and you sell it well, they're going to appreciate it because you're renting out a ton of their units and you take some of that off of their plate and then it's put onto your plate to find tenants. And as far as the profit goes, they don't care because you've taken it off their plate and leased out units for them and taken them off of their books. So let's break it down into the pros and cons of apartment arbitrage. Is this the right strategy for you? Pro number one is there is a high potential for profits here. Basically, you are taking a long-term lease and now you're gonna start offering that out as a short-term rental. Probably not an Airbnb, but more going after like the mid-term corporate leases, like I said, traveling nurses, some of those people that are looking to stay somewhere temporarily, that's fully furnished and just a nice place that they can come home after a day of work, rest, and then move on with their day. So this does give you some high potential for those profits because those shorter to mid-term rental tenants are willing to pay big bucks for fully furnished units ready to go just because of the ease of use. And it's cheaper for them than an Airbnb because the short-term rentals are even higher. So a mid-term lease is great and it provides some amazing income for you, and you get to make the profit between the actual lease you signed and what you negotiate with that midterm tenant. Pro number two is this gives you absolute flexibility with your investing. Basically, you're gonna sign a 1 to 2 year lease, whatever you negotiate with that apartment complex. And if you decide that's not the market for you, at the end of that, you can pull out and go move to a completely different area, a completely different state. It doesn't matter. You're not tied down and locked to whether real estate prices are up and if it makes sense for you to buy or sell during that given window. You simply can just pick up, take the furniture out, move to a different location, and put new furniture in somewhere. So it gives you incredible flexibility. If you decide to relocate yourself, you can pick up and move your entire business to keep it local if you prefer to run it that way. So the flexibility is another amazing pro to apartment arbitrage. And pro number three, you may have guessed it, a low initial investment. You are not having to put a 25% down payment on a $500,000 home or $1 million duplex or multiplex. You are simply going in, negotiating a lease. You're probably gonna have to put down some sort of security deposit on that lease, just like we all would if we were renting a property. And then you just need to put furniture in there. You're not looking for top of the line Pottery Barn style furniture. You're just putting stuff in there that's practical, that looks good and is appealing to people, the same stuff that you would put inside of an Airbnb or anything like that. And so your initial costs are much lower. You're not shelling out $50,000 to $150,000 per unit. You're simply putting in a $2,000 security deposit and furnishing the place for $3,000 to $4,000, and you're off to the races earning thousands of dollars a month in income from the difference between the negotiated lease and what you're charging your new tenant. Now let's talk about the cons. Con number one is there is some risk involved in this strategy. While you don't necessarily have a home that would be foreclosed on if you didn't have a tenant making payments, you are on the hook legally via a binding contract to make those payments every month, whether there is a tenant in there or not, whether they are paying you or not, you have to make those payments. So when you lease this out, make sure that you've got some savings built up in case you need to cover a few months without a tenant, whatever that may be. You can make a lot of money here, but there is some risk involved, so make sure that you weigh that out before you jump in. Con number two here is all you're doing with this strategy is simply creating monthly income. You're not building wealth through any sort of appreciation. Basically, everything you've got into this asset is depreciating. The furniture is depreciating, losing value. You're gonna have to replace that over time. So you may be earning monthly income and maybe more monthly income than you could get from a long-term rental single-family residence, but at the end of the day, you're walking away with nothing. If you shut down the entire business, you get $0. So this strictly depends on you having a tenant in there earning monthly income. You're not gonna be able to sell off assets at the end of the day and retire on what you've earned. And con number three, last but not least, you don't get any of the traditional tax benefits that come with owning real estate. So again, can create some great income for you on a monthly basis, but you're not getting all of the advantages that come along with actually owning some real estate. So lower risk, great reward potential, but you do lose out on a few of the advantages that you get when you actually own some real estate. Before we wrap it up, I want to give you a quick piece of advice here as far as where you would be looking to do this. Now, there are some websites that will actually help you do this. They've already pre-negotiated some deals with some apartment complexes, and those are great. However, the apartment complexes actually limit the number of days that you can rent the unit out. So you cannot make this a full-time thing there. And honestly, I've run the numbers on it, and using those services, you're not gonna make any money unless you needed the apartment to live in for some time and do a part-time living scenario. So if you're going to do it on your own though, you want to go after smaller apartment buildings. You're not necessarily looking to go to your local town, big corporate apartment building. You might be able to negotiate something there, but what you're really looking for is the single investor owner that owns a 16-unit apartment building, or it even could be a triplex or quadplex, but somebody that's an independent owner that you can actually sit down and explain your method to them on what you're going to do and actually take some of that off their plate. The corporate places aren't really gonna be as interested in taking 6, 8, 10 units off of their plate. That's already built into some of their financial models. But if you can go to a mom and pop's owned apartment complex and tell them, hey, I can rent out these 4 units for you right now for this price, I'll sign on the dotted line, they will absolutely love you for it. So those are your targets there. Again, I'm not saying the corporate guys can't go after that, but it's gonna be a little bit harder sell unless you've got a great relationship with the rep there. So that is a breakdown of apartment arbitrage. It is a great strategy for some people that are looking to get into real estate investing. They love the feel of the Airbnb, setting all of that up, advertising some of it. It does take some work to make it happen, and it does come with some capital, although not as much as what it would take to get into a short-term rental. So I hope you enjoyed today's video. If you did, make sure that you hit that like button, leave a comment with any questions you have about the method below, as well as hit that subscribe button so you don't miss out on future videos. I'm here to help you break out of the 9 to 5, gain financial freedom, and grow wealth through real estate. We'll see you next time.